Alright guys, so we'll be diving deep today. This is the moment the global tech race quietly turns into an all-or-nothing battle, and most people still don't see it coming. Alright, let's go deep today. The global chip war has entered a far more dangerous phase. Right now, the US still holds the lead, but China is moving fast, and the stakes couldn't be higher. At the moment, China remains behind in the most advanced AI chips. That's the reality. But here's the part that should make investors nervous. Once that gap is closed, the game fundamentally changes. Once Chinese firms reach parity on the AI chip front, the advantage disappears almost overnight. Why? Scale. China doesn't just catch up, it overwhelms. When domestic chip production reaches maturity, China can manufacture at massive scale, driving costs sharply lower. And when that happens, the revenue models of companies like Intel, AMD, and Nvidia come under serious pressure. Margins shrink, pricing power weakens, market dominance erodes, but the real threat isn't just hardware. Beyond supply chains lies something far more powerful: human capital. China isn't just building chips, it's building an ecosystem. Chinese engineers and researchers will optimize their own silicon for their own AI models, creating systems that are more efficient, more specialized, and more tightly integrated. And much of this development will be open source. That matters. Open ecosystems move faster, adapt quicker, and attract global talent. Over time, this kind of momentum could put enormous pressure on centralized AI platforms, including organizations like OpenAI. The data already points in this direction. Roughly 50% of the world's AI researchers are Chinese. Around 70% of last year's AI patents came from China. This isn't accidental, it's structural. China's AI ecosystem is deep, aggressive, and relentlessly innovative. The work culture is intense. The talent pool is massive. And the software development base is expanding at a scale few countries can match. And how is China going to drive this innovation? They're going to embark on yet another round of Hunger Games, Beijing style. The central government is going to pump a ton of money into Chinese startups and get them to compete with each other. It's the same strategy they used to build up their EV sector: a boatload of subsidies from their trade surplus going into the economy. China just started 4 venture capital funds to support tech startups. The national fund is backed by over 100 billion RMB, which is around $17 billion. The money is funded by ultra-long bonds. Borrowing costs are so low that Beijing can raise a ton of debt to keep this up for a very, very long time. They have a timeline of 20 years, which means Beijing is prepared for a long-term siege on U.S. tech. Meanwhile, U.S. chip giants realize they are behind the 8 ball where it really matters in AI. Now the American plan is to create the biggest, baddest AI model, to create Skynet, the Matrix, OGGI, whatever you want to call it. But in pursuing that, they will be burning a ton of money. Nvidia suddenly did a big technology grab to enter the inference space. They're going to spend $20 billion to license technology from Grok. They literally bought almost the entire company. Nvidia paying an arm and a leg for inference technology is a really critical sign to everyone. It's an admission by big tech that China is in a superior position there. The fatal U.S. mistake: chasing AGI, forgetting applications. U.S. chipmakers have become too obsessed about reaching AGI. They forgot about applications, how to actually apply the technology in a really practical way. Here's why Grok is so important. It's bridging the gap that the US is severely behind versus China. The only way to catch up and stand a chance is to blow a ton of money. This technology is all about inference, and that means answering AI questions instantly and reliably. It's something China has been doing supremely well for years. China couldn't afford to train massive models, so they took the practical route instead. Now the US realizes they need to create more practical chips that have ultra-low latency, predictable timing, and power efficiency. There's no point in creating the best chip in the world if companies can't afford it or even use it properly. Inference is important. It allows computers to switch and select the right machine learning models. So you can type something in Chinese, or you can upload a photo, and inference chips allow quicker analysis. And that's why Chinese AI can be used in critical industries, including healthcare and hospitals. But here's the critical question: Can the U.S. really catch up with China in this aspect? Now, there are two big problems here that the Americans need to address. The first is a declining manufacturing sector. The reason why China can create and optimize these inference chips fast is because they have the world's biggest industrial ecosystem. Meanwhile, the U.S. industrial base is shrinking thanks to the tariffs. Now, sure, data center construction is increasing, but look at U.S. factories. Less spending is happening, especially after the trade war started. Trump's immigration crackdown sure did a number here. Workforce growth is sluggish. In fact, a huge amount of manufacturing jobs have been lost. The tariffs themselves have increased the cost of industrial inputs like steel and aluminum. So the big engine that drives AI inference isn't there in the US. You need stronger and bigger factories to help optimize the AI as well. It's a feedback loop that the U.S. needs to solve, but how can it? And it kind of gets worse as the U.S. industrial base shrinks. As less stuff gets made, fewer workers are needed. Trump is also looking to replace U.S. workers with robotic overlords. Now, we had a joke a few months back that the machines are coming. But ladies and gents, the machines are really coming this time. Trump even said, "You have robots, but you're going to have to get somebody to start those robots. And you're going to have to improve the robots, but we're going to have robotic factories plus manpower. So we're going to have enough. We're going to need the help of robots and other forms of employment. We're going to be employing a lot of artificial things, but the beauty is we're going to have more jobs than we've ever had." Beyond a shrinking manufacturing base, there's also another issue, and it's a really big one. The U.S. is still not generating enough power. There are tons of power-hungry NVIDIA chips around, but not enough electricity being generated in the United States. Even Michael Burry, the big short guy, is losing his mind. China has twice as much power as the U.S., and the buildup is still going strong. Chinese industries have access to over 3,100 gigawatts of power. The U.S. is barely at 1,500, but look at the slope of China's build-out. The rise since 2020 is much steeper than ever before. Beijing is firing on all cylinders here. They are burning fossil fuels. They're installing solar panels and they are going full throttle on nuclear power as well. This poses a real challenge for the US AI race. They are dumping money into a black hole for the latest AI chips. But there isn't enough domestic power to harness the full potential of said chips. Even pivoting to inference chips isn't enough. It's still a power generation game where the more cheap power you have that you can access, the greater your advantage. Yes, NVIDIA buying Grok for inference technology objectively is a smart move, but it is moot if you don't have cheap, abundant energy with a huge industrial base. You are still being handicapped. And in 2026, U.S. industries themselves are going to get squeezed even further. Everything from defense, electric vehicles, and chips are going to get hammered in less than a week. And this all revolves around the coming Chinese silver restrictions. There's a reason why global prices are nearly at $80 an ounce. On January the 1st, China will be imposing export restrictions on silver. If you want to get Chinese silver, you'll need special government licenses. It's clear as day what is happening here. Beijing doesn't want silver leaving their shores anymore. Demand is so fearsome that in China prices are $85 an ounce there. Silver is trading at a big premium because people, companies, and the government, they're stockpiling physical. Where is the U.S. going to get their supply? Because Chinese prices are so high, arbitrage traders are buying silver from London and New York, and they are shipping it all the way to China for the spread. Now it's quick money for them. They turn a very nice profit, and for China, it's more strategic. It's about cornering the global silver market. Get a ton of silver into the country first, then you shut the doors next. Even Elon Musk is in panic mode on X. He commented on the silver crisis. The exact words are, "This is not good. Silver is needed in many industrial processes," which is exactly true. Close that. If China ramps up the export controls or outright bans silver, then the squeeze could get worse. Now, I'm not saying that they will, but we are in a commodity war after all. And if you were China, would you allow the US or even Europe full, unrestricted access to your silver? Maybe not. I'm just saying. Now, does the U.S. produce their own silver? Yes, they do. But once again, there is a cost of production problem. In North America, the cost of producing 1 ounce of silver was nearly $20 in 2023. Meanwhile, in Asia, the cost of silver production is less than $9. And because China has the best supply chains around, it's probably still less than $10 today. And that means Beijing is getting low-cost silver for their own industries by imposing export controls and buying up silver at the same time. China is making the West spend a fortune to get this metal. The higher the cost of acquisition for the U.S., it nudges the debt closer toward the edge of a cliff. America has to borrow and spend even more money to compete. Now, can you call that weaponizing their supply chains? Yes, you can, but it's no holds barred at this point. The moment Donald Trump started his trade war plus the chip sanctions, what do you think was going to happen? The entire silver situation also exposes how the world is going to get split in two. Now we have talked endlessly about the bifurcation of the global economy. It will be the Western Hemisphere versus China plus the BRICS, and we aren't kidding about this one. These are the world's 10 largest undeveloped silver deposits, and with silver above $70 an ounce, we can be sure this will be developed. It's just a matter of time. If we look at BRICS, especially Russia and China, they have a boatload of silver buried underground. Over 200 million ounces between these two countries, which means China will have access to all the cheap silver they need. The U.S. themselves don't have any big deposits. That's why Trump is so obsessed with trying to control North America and Latin America. Mexico has an incredible deposit of 270 million ounces in Cerro. There's a reason why China is also active in Peru and Chile. A big part of the Chinese agenda is to be near silver supply. Peru has the next biggest deposit in Carani at nearly 230 million ounces. Commodities are going to be the big battleground in 2026. It literally fuels everything. You want to build data centers, you want to build chips, you want to build EV, then you have to secure your supply chains globally. Now, the price of silver has dramatically increased over the past week. It has been shooting up literally every single day. So in the short term, there could be pullbacks and profit-taking. But ladies and gents, we are now in uncharted territory. Silver at $80 is well past the previous high in 2011. It's higher than when the Hunt brothers tried to corner the silver markets. This is a big structural change. Even if silver corrects down, we best believe this rush will force both the U.S. and China to spend untold amounts of money. The stakes are just too high. China has been preparing for this moment for decades. Now, the Belt and Road isn't just to facilitate trade, it's to give China incredible access to global commodities. It's a grand infrastructure play that's paying dividends today. This is the reason why Beijing helped build a mega Chenke port in Peru. It is to secure supplies of copper, soy, lithium, and of course silver. We can expect the U.S. to develop a counter strategy, and there's no way to even fight without spending a ton of money that the U.S. doesn't have. So we can expect 2026 to be inflationary. They will print, and print. And while gold and silver rises, the dollar will continue circling the toilet bowl. But let me know what you think. Can the U.S. catch up in inference chips, and will China really cut silver exports to the West? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.